Investor Channel live stream. I don't even know what number we're on. I think we're probably approaching number 100. We'll hit it in 2020. Glad to do this. It's an awesome opportunity for me to come on once a week and address the subscriber base number one, represented through a lot of different channel creators. I've got Ryan Giffen here. He's back in the studio. He's going to pop on the live stream tonight. The reason why I wanted Ryan tonight, obviously very savvy investor, very unique investor, going to give us some insight as well on Tesla, which I'm pretty interested in hearing some of his insights. He covers the stock, which is to say I don't. I do have a little bit invested. For you guys that know, it is part of a smaller strategic portfolio that I actually have with M1 Finance. So you guys that do follow me, it's one of the 12 in there. And it's actually funny. I own 3/4 of a share and we're up 64% in it. So whoop-de-doo, not too shabby for a stock that I will admit I don't follow. But nonetheless, we've come out with a couple of nice videos covering the M1 opportunity, as well as the opportunity for investing for kids. I know sometimes those topics that I put through on the channel, I don't put those through to go viral. Okay, I actually put those through to help people. All right, those are actual strategies that I follow. So for you guys that actually did tune into that video to take a little bit of value and employ in your own personal lives, good on you for doing that. Honestly, you'll find that your investing journey isn't happening upon the right answer and just tripping and falling on one thing that makes you successful overnight. It's going to be a combination of a lot of different things that you're able to put together. All right. And this collaboration effort that we put through on the channel, this is one of those things. If you can just pop on for 20 or 25 minutes, I provide a 2-hour block. The 2-hour block, we try to bring people on to the message as well and give them an opportunity to address the crew here and also to talk stock. And I think this is a topic that we don't talk enough about. And I think there's a lot of faux pas surrounding the topic. And I think people who have watched this bull market over the last 10 or 12 years, I wouldn't help to feel like I was a little bit left out, to be honest with you. But I've actually got Ryan Giffen waiting here to pop on. And then I've got one of my brothers with the family of the Independent Investor Channel. And I'm so ecstatic to see Jared Odell pop in here as well. So I'm going to bring Jared Odell. If you don't mind, Jared, just wait a little bit. I'm going to give Ryan the opportunity to pop on here. And we're going to take the first block. So if you want to just pop on after Ryan's done, I'm going to give him about 15 or so minutes. And then I want to bring you on right after because I got a ton of questions for you, brother. Thank you. Thank you for popping on here. But it's obviously been an interesting week. Obviously, some pretty tragic news with Kobe Bryant. To be honest with you, it sure did touch me. That's for sure. You know, I'm a big basketball fan. I was a Michael Jordan fan. So when this new guy comes into the league and he starts throwing his weight around as a young kid, it was pretty amazing to watch Kobe Bryant, you know, come up through the ranks a little bit. And I was always a Trailblazer fan. And it was always enjoyable to watch Kobe Bryant show up every single night and scorch the Blazers. But just a tragic accident, certainly. To be honest with you, I've felt it all week. I just I don't know. It reminds us all about how you know how fragile life is, and how every day you need to be striving to make yourself better. And it goes beyond investing. It really does. I was talking to a colleague at work today, and it's amazing how in the investing game, there's so many different ways to succeed, but there's also so many different ways that people will circumvent, go around, dig themselves under, jump over those successful methods of stock investing, and seek out things that really just are not, they don't work. Okay. So on the flip side of it, there's a lot of different ways to get yourself in trouble. And I've said many, many years on the Independent Investor Channel, the stock market is a humbling place. Obviously, a little bit of an awakening today. I was very tempted to do some strategic buying in the market today. I did not. I'm really taking a monitoring perspective on this market. I really am. I built the portfolio to withstand downturns like these. A little disappointed in the energy action today. So, you know, ExxonMobil at 10 times, Royal Dutch, I think is trading about the same. And Gen X was nice enough to share the dividend increase for Chevron, which rounds out the majority of my single stock holdings in energy. But, you know, a little different to see that. They've been beaten down pretty good. So a little bit discouraging to see an already beat down sector that I thought is going to probably turn the table this year in 2020. So I think there's some good value there, but definitely holding my positions. I'm not really that ecstatic about jumping into the market here, down just 2% today. I don't know where we're at for the year. I'm sure somebody has picked up on that for 2020 and kind of knows where we're at thus far. But yeah, it's been kind of an interesting start to the year. Absolutely. And I think the reason for my hesitation on this market is the systemic risk. Anytime there's anything systemic that's going to crop up in the market, that really gives me the opportunity to sit back and pause a little bit and really take a look at the program. This is where I'll finish out my taxes, get that tax return in, and either look. One of the Roth IRAs have taken the opportunity to max fund already. Mine, I'm still waiting on. I do have the funds ready. But the max funding that went into the first Roth IRA actually has not been invested yet. And I don't plan on it. I do plan on continuing to monitor this market. I'm satisfied with my diversification. I'm satisfied with my dividend growth. I'm satisfied with my aggressive growth. And the bright spot in the portfolio today was my bond exposure. So whoop-de-doo, we got to ring the register on one small aspect of the portfolio. But you know, when we chalked today up today, it was a pretty rough day, down 600 in the Dow. I think we were down 120, 150 in the NASDAQ anyway. So pretty rough day all the way around, but there's definitely lessons to be learned. I know there's a ton of new investors that are popping in here and looking to get that next best thing, that next best stock on the ledger that's going to make you a millionaire. That's not the type of dialogue you can expect from this community anyway, and me specifically, as I don't believe in that. I believe you can spend a lifetime actually honing this craft, never to get it perfect, okay? But we're always looking to pursue wealth building strategy that has worked. And if you do it for long enough and you keep that adequate pressure on the system, you're destined to succeed in up markets or down markets. And that's what we do. We invest to succeed in both. Okay. So I just want to shout out the channel creators. I've got Ryan Giffen and I've got my good friend Jared Odell, who's popped in here as well, who I am absolutely ecstatic to talk to both of these gentlemen. I will continue to try to drop the invite into the live stream tonight so you guys can have the opportunity, pop in as you will, and I'll rotate folks through. They can say hi to the community, let us know where you're hailing from, what your story is. But I've got Lydia Santiago just popped in to the live stream from California. Appreciate your support and popping in. I've got Hidden Freedom Investing. I've got Dave in the group here supporting. JMac Investing as well, who's actually been killing it. I missed his live stream on Wednesday. I feel kind of bad, Jason. I apologize. I was indisposed. But Jason's doing a good job here offering a product on Wednesday to keep the fire stoked, right, on the topic. So appreciate all Jason's effort there in bringing people together. Right above Gen X Dividend Investor, who's down to the last two in the portfolio. And I'm pretty excited, actually. I've never been so excited to watch such an awesome piece of content on YouTube. You guys know I'm very vocal about my feeling about the Gen X Dividend Investor channel. I'm pretty blatant about calling him number one, to be honest with you. I think the quality of content is off the charts, and I'll continue to support that message. I'm just humbled to be associated with Gen X Dividend Investor. The last video I caught was the J&J video, which I really took personal. It's a company that I do cover. And I thought it was spot on phenomenal. So if there's anybody that's new in the subscriber base, you're going to want to understand there's about a dozen channel creators here represented in the live stream. And that's really the intent, is to bring this community together to provide value, quite frankly, to you. Okay. So if you feel like I'm talking to you right now, I am. I'm talking to you. Okay. So anyway, if you see some of these channel creators in the thread here, MP the Entrepreneur's made his way in. I actually saw my good friend with Financial Investor pop in. Brent is in the group. And like I said, I've got Ryan Griffin, who I'm about to bring in about a minute or so. Let him address the group as well. I've got Investing with Aaron in the group, and I've got Quest to Fire as well, who we had on as a guest last week. And I thought that was just really, really cool. I reviewed the content afterwards, and that's some real devotion to actually join into a stream when you're on your break at work. That's pretty awesome. I had Jamie with Focus Fire Investing, who actually popped into this before we went live. And that's going to be something that I think I'm going to start doing a little bit for those folks that don't want to pop into the live stream. Maybe you've got a little bit of camera shy. I do as well to this day. I've been running the Independent Investor channel for 3 years. That's freaking fine. You can come on and rap with me. I know there's been a lot of people that have reached out to me that are looking to get a little bit more one-on-one, and that's totally cool. I appreciate that. But maybe talking through this venue is a viable option for you. That way we can just sit and kind of rap and take advantage and leverage the power of technology. So really enjoy that opportunity. I think I covered all the channel creators, fairly certain, Financial Investor and Brent. I'm just doing a quick scan here to make sure those call outs. So with that, guys, honestly, man, welcome. I'm totally stoked to have you. 2020, I'm kind of glad to see January freaking go, to be honest with you. It's been kind of an interesting, choppy market, certainly volatility kicking up. That's all good. But there's been, obviously with the systemic scare, the coronavirus, and monitoring that, certainly those are things as an investor I absolutely pay attention to. But with that, guys, I'm going to kick Ryan Giffen here in the group, who's a new dad as well. So I want to make sure and congratulate him, but definitely going to benefit from hearing his perspective here on the stock market. I've looked forward to this all week. So this is kind of a treat for me, and I hope you feel the same. Here we go. We're going to rock and roll. I'm going to bring Ryan into the group here.
How's it going, everyone? First, just want to say, Ryan, thank you for having me on, brother. I think the last time we tried to coordinate this, you said, hey, can you come on this Friday? And I was like, well, my wife's going to be induced for a baby on that day. So we got to kind of see. And so we had a delay till now. So I really appreciate the opportunity.
You're welcome.
Appreciate it, man. So just more formally, my name is Ryan Giffen. I run a YouTube channel where I post at least one video a week. And it really just kind of documents whatever investment I'm into at that time. So when I first started out, I was getting my first rental property together, and I was documenting a lot of different things about investing in real estate. And then once I finished that acquisition and got all settled, I then saw that the Tesla stock price was dropping. And I've been a longtime fan of Elon Musk, more particularly, because I've been growing a business throughout my 20s. And kind of like when things got tough, I'm like, my goal always was like to get my business revenue to $2 million, and we're getting very close to that. I'm like, that's very achievable. Like, this guy's going to he's creating landing rockets that are going to go to Mars and revolutionizing the car industry. Like, what can I learn from him? So I read like everything on him. I never invested in the stock because I just thought it was kind of overvalued at the time. And then when things kind of drop, Ryan, it piques my interest. Like the coronavirus, I have been trying to capitalize on that a little bit, just because I'm bullish, like for the next decade. I believe before we see like we're going to have soft spots in the economy, but I think, I have a bullish thesis on the market overall, that we have kind of these 20-year run in equities followed by commodity runs. I think once commodities become such a bad business to be in, you have to overpay from that, and that kind of steals money from the equity markets. It's my broad macro thesis. So
let me hit you up. I want to know your perspective. I've got a ton of new investors that are making their way into the channel, brand new investors. They've got their first 1,000, 5,000, 10,000 bucks. I mean, can you offer a little bit? I want to bounce this off of you and get your perspective for their benefit, because I hear what you're saying about the long term, and the right answer for those investors is invest when you can, how you can, as of yesterday, right? But for a new investor, that's a hard philosophy. Sometimes that's a learned philosophy over time. It's a very mature philosophy. So how can new investors prescribe to that earlier? Because it's important you get there.
Yeah, investing is a very different mental process. Especially what we're trying to do, picking individual stocks. We're trying to be right when the market is wrong. But for a new investor, most of my portfolio, I have over a 6-figure portfolio now, but most of that is in ETFs. And now that I have time to do my homework, because I've been trying to grow my business and I've just been bullish on the market, I'm buying, the SPY, the VOO, these kinds of things. And then, I've taken about 30% of that portfolio now and saying, well, can I outperform? And I'm just really trying to do my homework and play around with volatile things. Like Tesla is a very volatile stock. And like I said, when the stock dropped, I just took a deep look into it, and I just fell in love with the company. Actually, I went out and bought a Tesla Model 3. That's how much I was like, this is an amazing company. When I drive the car every day, you're trying to how do you evaluate a company? Is Tesla worth $100 billion market cap? There's probably a lot of future value priced into that. But yeah, and in the whole self-driving thing, which I've documented on my channel, if you guys want to learn about Tesla's full self-driving, I paid $6,000 for that feature, which is, I don't have level 5 autonomy, which is kind of crazy. And actually, I think it's one of the risks associated with Tesla is there are these promises for full self-driving cars, which is humans have never accomplished before. And what if he doesn't deliver and he's taking money for it? I think he could be subjecting himself to a class action lawsuit, which is part of there's a risk associated with everything. Or if he accomplishes it, what's the market cap on a self-driving car? It's probably in the trillions. So you could see Tesla become one of the most powerful companies in the world. What I did, I've made enough money where I've been able to trim my position, and everything I have in there, I'll keep in there forever. And I have a riskless bet on Elon Musk, who I view as the Edison of our time. I have a riskless bet on probably one of the smartest people on the planet, which is pretty cool.
Rock on. Can you give me some idea, Ryan? Because now we were talking a little bit about there being 1 million YouTube channels on right now. When I first started this gig, I'd be hard pressed to name 10. Now it seems like there's channels all over the place. It's really hard. I really try to follow as much as I can. But can you give us some idea? You'd made this comment to me a couple months ago that the majority of your portfolio is ETFs. Can you give me some idea about where you seek out your exposure using the passive income strategy, just the sleepy investing?
Like which kind of ETFs am I buying?
Yeah, what company are you opting? I always find value, I think, for new investors who are looking. I just got this question at work today. Hey, is Vanguard good or is Fidelity good? I know Fidelity just rolled out the fractional shares. I want to shout out to JMac Investing who rolled that out. I think he was the first one. At least he was the first one in my thread that came through, and that was pretty awesome. And that's one of the inherent benefits that I really want people to extract from this group is we have so many feelers out there monitoring the market. If there's a move in the market to an investor's benefit, it's going to flow through this group. So for anybody making their way to the stream tonight, that's one of the things that you can get is just to be more aware. And that can mean a lot. If you don't know a whole lot and you're not very aware, it's great to get the consensus of multiple eyes on the market at any given time, because I can't see it all and neither can you, but collectively we can be pretty powerful. So just give me some idea about, what company and what type of exposure, whether international or domestic, S&P, whatever.
Yeah. And if anyone wants like deep into this, I made a whole video going over my whole portfolio, but I'm with you on Merrill. We use Merrill for our company. We use it for our retirement fund. And we offer a match, and I make sure to maximize that. And they're more managed funds, unfortunately, or through the payroll companies. The expense ratios are reasonable, versus some other ones that are, over 1%. Like we're somewhere in like in the 0.25% for the managed funds. It's not bad. So those I can't tell you specifically. They're a managed fund of some sort. But then I also have an IRA, which, it's funny. I'm still like bullish on the market, but I'm a millennial and I grew up through the Great Recession, and it had a lot to do with my mindset coming into investing. I knew I needed to invest, and I saw people that really got hurt, by not investing properly. And I got like so into Austrian economics, and it made me kind of weary of the market, which I was wrong to be weary of the market, because we were coming out of a terrible market, which was opportunistic for investors. And when I first started building a portfolio into buying stocks, I got into Ray Dalio, which I'm sure everyone's familiar with him, the hedge fund manager of Bridgewater. And so I created what's called this all-weather fund. And you were talking about bonds before this. It's heavy into bonds. It's short-term and long-term U.S. Treasuries. And then it suggests buying the VU, which is about 30% of that portfolio, and then to commodities and the GLD and the gold. But real quick with that, it's what it's done. It gives you a relative. They underperformed the market last year. It gave like a 20% return in the market. I think it was about 28. But if you backtrack it over 80 years, it's never lost more than 4%. So, which is pretty incredible. And it's relative. It's providing relative gains to the market. So
it's awesome.
I was risk averse, and I've just evolved. I've always kind of wanted to try different methods, and it's part of my portfolio that I kind of keep to just as a more risk averse type way of investing. So,
hey Ryan, do you mind declaring your age to the group, man? So
30 years
30?
old.
Yeah, I don't. Yeah, that's amazing, man. And that's if we can instill some of that investor maturity younger for people who are tuning in, man. Honestly, I wish I had my head screwed on straight when I was 30. Honestly, it hasn't been without trial and tribulation in my life, no doubt about it. I guess that's part of what makes our story ours, right? Because I'm sure you didn't just wake up one morning and have this level of, hey, you have the desire to invest, but sometimes that desire can take you to places that can trip you up a little bit, and you get to learn those lessons a bit. But, good on you, man. 30 years old. That's legit. Good for you.
Mine came through pain, really. Like I live in South Florida. Like the real estate market was so overvalued, and literally like everyone I knew was like going broke. And people that built my father had a great business and lots of real estate, and like it's just everything I wiped out. Like my uncle went years. He's a high-end architect. Went years without a job. And so I just knew I needed to figure out the system, and I didn't figure it out perfectly. As I said, some of my first investments were just in the silver. I was just so scared of another collapse. I got really into people like Peter Schiff, different kind of economists, and they were just wrong. But at least I started. Getting started is that, and just having the appetite to delay gratification, which is investing. Saying I'm gonna, not that's a great start. Yeah. So, but that's where it started for me, was coming through, just seeing everything going bad, and I don't want this to happen to me, and it drove me to grow my business and avidly invest.
It sounds like you're killing it, man, for sure. That's awesome. So for anybody that's making their way in or they're catching the live stream after, it'd be a personal favor of mine to kick over Ryan, somebody that I've met for just probably the latter part of 2019, right, Ryan? Probably into last summer, something like that. You kind of came on the scene, or at least were introduced to me. Hell, I'll do anything to support your mission. I think it's awesome. I think the reason why I asked your age is you're kind of an example for people who tune in, and they may not know the first thing about investing, but if they look at you at 30 and be like, hey, I don't really resonate with this 42-year-old independent investor guy. I don't get it. It's kind of cool when we demonstrate that there's a ton of different people from all kinds of different places, not only in the US, but definitely globally. I know we talked a little bit about some of the roadblocks that some of our international investors are kind of up against. And what does that mean for us here in the US? Well, it means that you don't have any excuses. So get off your ass, number one. You won't, you're not going to get any sympathy from me, none. Because again, I have this come through the back door of the Independent Investor channel all the time. And people are like, man, I would kill for y'all's opportunity, you know?
Yeah.
So wake up, get with the program. But I think you do, man. You do provide a hell of an example for people, Ryan, for sure. So it's pretty awesome.
Yeah, like you were saying, like you were saying, just like the no expenses to buying a stock, like really allows you to nip away at these little price movements down rather than having to make a large decision at once. Like I told you, I wanted to add more Facebook today to the portfolio, and I bought a share in the morning and a share in the afternoon, and if it was years ago, I would have saved up $1,000 before making that, because if I'm going to pay $10 to $20 for a commission fee. So we live in great times, and I'm just thankful. Like, not to say like be insensitive, but like we really have an opportunity to create abundance in our lives through the platform, the YouTube opportunity, and it's pretty amazing. And just thanks again for allowing me to come out, and anyone that finds value. Like I said, that was kind of the goal, is just to find other people that may be interested in what I'm doing, and if I could prove my investments. And so far, I feel like the things I've documented on my channel are aging well so far, and that's been pretty cool. So if anyone wants to follow me, I'll just kind of drop a couple. I'll be in the comment section all night. I know you're going to rotate people, but
yeah, I am. Did you want to mention you have 2 YouTube channels that are represented in the Giffen household? All right.
Yeah.
Your wife's going to thank me.
I'm the small tuber. Actually, I did a collab. You can find my wife. She's got about 25,000 subscribers, and she was really my inspiration and my mentor to help me start. And it's been amazing. Crazy things. Like we had our daughter born 2 weeks ago, and she did I guess it's really popular, like birth and labor delivery vlogs. Over 200,000 views. Like it's and it's it's beautiful. It's paying our mortgage. Like it's crazy. We live in amazing times. The fact that
we do.
Commission free in our lives and get paid for it. Like what?
freaking technology, baby. And thanks to YouTube. I love it, man. I do. Go ahead.
I'm saying, like, and part of our journey was really kind of also somewhat similar to Gen X. We thought, part of it is for our children, to kind of learn from things that we've done in our grandchildren. I always thought it would be cool to like know my grandfathers or grandmothers, like when they were in their prime, like just like feel their energy, rather than having like this seem like as an older person, but like they were,
dude, that's awesome
too. So like we want to like kind of think we can prolong our lives by doing that.
Just imagine my grandkids tuning into my freaking live streams when I was 42 years old, like, look at that guy, man, he's tearing it up. Awesome. Absolutely. Not too shabby, man. Ryan Giffen, man, thank you so much.
Thanks
awesome.
For having me,
really appreciate it. All right, brother. Take it easy.
Yeah.
All right, guys. So this is kind of a special treat for me. I'm going to bring on just an awesome friend of the channel. A little bit selfish of me because this is going to be a real treat. I've went back and forth with this subscriber now for probably since the inception of the channel. I kid you not. I'm going to ask him directly. But I can't tell you the strength of this community is built off of a lot of different people. All right. And there's not one person in my subscriber base that's perfect. Okay. I would imagine they're a lot like me. Okay. But Jared Odell, I'm going to bring on. It's going to be a super, super special treat for me. He's an administrator in my Facebook group that provides just a hell of a lot of value to a lot of people who can go on to just another forum and throw your question in there and get 25 or 30 responses back. And Jared helps me immensely provide a really unique perspective on investing. So I'm going to bring Jared on right now, man, and we're going to wrap a bit. So stand by a sec. You got me okay, Jared?
Yes, I hear you. Can you hear me?
I can hear you fine, man. Thank you so much for taking your time. Come on and rap with me on the Independent Investor channel. It's freaking awesome.
Absolutely. Absolutely. This is a good time with the market kind of acting up a little bit to talk a little bit.
love to know your perspective. Certainly what you're seeing. I always see your threads on what you're picking up. I usually pick up that, and it seems like you kind of do a little bit of opportunistic buying, which is a strategy that I deploy. Didn't do any today. I don't know. Maybe I'm being a little bit more close to the vest than I need to. But just deploying a little bit of monitoring coming into January. Obviously things going on. Okay. Not to get political, but there are things going on. But certainly I'd like you to introduce yourself to the group and just kind of let them know how long you've been investing and what your perspectives are on the investing game. Be awesome.
Absolutely. My name's Jared Odell. I live just outside of Fort Worth, Texas, north central Texas. I've lived here pretty much all of my life. Grew up about an hour north of here. Grandparents were farmers, so I grew up farming basically. And the rest of my family are still there. And grandparents are 90s and getting old, and and so they're not farming anymore. But my brother still farms part-time. He works in a hospital full-time. My uncle works part-time farming, and he works full-time. So I moved. I'm actually about an hour away from the family farm, and I work as a registered nurse, cardiovascular ICU. Been doing that for about 15, 16 years, somewhere in there. I'm trying to think. Investing. Actually, I'm married, Martha, and 2 kids, 8-year-old boy, 11-year-old girl.
I've got an 8 and a 12.
Oh, okay.
So, awesome.
Cool,
man.
cool. I'm trying to think. My mind is all over the place, but as far as
how do you think I feel? How do you think I feel?
I know.
Good God, man. I don't script any of this, man. It's funner that way. It's funner. So you never know what you're going to get, man. But I don't know, Jared, you've been with the channel a long time, and I got to tell you, it's a special treat for me to put a face with the name. Absolutely. So I get to actually thank you. Honestly, your involvement in the Facebook group, man, let me talk real for a second. Hell, you don't have to do that stuff. You don't, but you choose to do it. Why?
Absolutely.
Why?
I think it's probably because of how much I've gotten from you, how much I've learned from you. I'll go back to the investing side. I started investing probably 2001, I'm thinking, around that first little crash we had. Remember 2001? Yes, I do. And I didn't know what I was doing. I just knew that the market was down, and it seemed like a good time to start buying stocks. So I was talking around. I said, hey, who do I go to? So they pointed me to Edward Jones. So I went to Edward Jones. They put me in 4 mutual funds. And
it sounds familiar.
Exactly. And I got going down that road. And
wow.
And I think I was putting $100 a month into my Roth IRA at that time. I was still a college student, so I was working. I was trying to pay for college, and I was trying to invest. I'm trying to think here. And then I got married in 2004 and graduated around that same time. And we started having children in 2008. The crash happened in 2008. And so, unfortunately, most of my money was tied up trying to pay for diapers and things like that. So I wasn't able to put a bunch of money into the market. We had just bought a home in end of 2006, actually. So we missed it here. It's kind of like my investing, I buy and then it goes down. And so
I always think it's just me,
Exactly.
I've learned to try not to be so self-deprecating, and you followed me for a while. In investing, I say it all the time. I try to foot stomp this idea that the market it's not a playground. It's serious business. It really is. That's why typically you have me come on, and I take this opportunity serious. I do have fun with it. I really do. But you said a couple things. You must have heard me say, hey, if you're with Edward Jones, pull out your statement and identify those things. I don't think there's anything wrong with that. I don't think there's anything wrong with people being a little bit more critical and doing what you do. Now, if you need that coaching and you need that tutelage and you need that little bit to bridge the gap between non-investor to investor, okay. But I look back at that as being, it was a mistake. It really was. I went, I forewent years of up performance in the market just to forego that to fees. And I was with Edward Jones, and I don't mind saying it. They, their fee disclosure, if you wanted to go on and just Google their fee disclosure, you could find it online and see all those things that I'm talking about that many people, they don't take the time to pay attention to. And I think it's a big problem. I don't think a lot of people do what we do. And I think there's a ton of people who opt for the status quo. That's really the way I feel. And I've yet to be proven wrong.
I was kind of growing frustrated by it. We met once a year probably as time went on, and then it got to where I didn't even hear from them anymore. It'd go 2 years, 3 years, I wouldn't hear, and I'd have to call them. Yep. And so around this time, I remember Scott Trade, seeing those commercials on TV. Yep. And so I thought, I think I can probably do this as well as he's doing it, maybe better. So I moved all my money to Scott Trade. I said, I think I'm just a natural self-directed investor. And I started trying to self-directed invest. Of course, I wasn't doing it right. I was investing in stocks, and I didn't have any idea how to do any research. Lost a little bit of money. I probably lost about maybe $8,000 or so in the market, and then I realized something wasn't right here. I just kind of put everything in cash and just kind of closed the door on it and just was done with it for a while.
Frustrated, hell with it, and throwing the towel. I went through something similar. My
money just sat there in cash. Unfortunately, had I actually seen your video about 5 years earlier, I would probably have twice as much money right now. But you weren't out yet. So time goes on, years kind of go, and then I start trying to figure this out, and I'm searching YouTube, and I'm kind of going through, and then I come across your channel. I don't know how I come across your channel, and I start watching your videos, and it just kind of clicks with me. It makes sense. I'm like, I think I can do what he's saying here. He's talking about passive investing in the S&P 500. He's talking about buying quality, blue chip stocks. This all makes sense. I think I can do that. And so I just started kind of implementing some of these things that you were saying. I probably pushed half my money into VOO, and then I was kind of starting to learn how to tinker a little bit with individual stocks. And that's kind of what I've been doing. Time has gone on here, and I've kind of been looking here lately. I've been trying to get better. I've been trying to fine tune my investing. And I think what I'm kind of learning is that I can't beat the market. I've been trying. I have my passive account here, and I'm about 75, probably close to 75% passive. I mean, most of my money is in index and ETFs. My Roth 401k at work is where most of my money is, and it's in index funds, VOO and VEU. They use Vanguard, and so probably about 3/4 of my money is in that account, and then the other quarter is in me trying to kind of play with this here. But I'm kind of learning that the individual stock thing, especially with the way the market is turned, and I'm looking at my passive account, and I'm up. I'm up double digits, and then I'm looking at my individual stocks, and I'm maybe breaking even, maybe single digits. And so I think I'm going to adjust the way I'm doing this just a little bit, and I'm going to start passive investing a little bit more even.
I don't know. I think you're probably evolving like any investor, trying to always fine tune that style, that profile that I talk about. That's so important. I think me and you. I think the reason I enjoy watching your threads all the time in the Facebook group is I think me and you have so many similar characteristics about we want to try to be as defensive as we can. Anytime, Jared, I step outside myself and try to outsmart or try to get cute with the freaking stock market, I get my ass kicked. Yeah. So I just, how many times do you need to go through that before you just kind of, I'm not an arrogant person, but I think that comes from a little bit of an arrogant place.
Exactly.
I really do. Now, I'm not saying it's not possible. It's not possible to beat the market, but Good God, you know, this is the humbling aspect to the market. And for what? I had somebody ask me carte blanche because I beat the market last year only because of my swing trading. That's it. It had nothing to do with my picking the right quality stocks and creating that little dab of alpha. And I think it was 2 or 3 bits. And somebody asked me, was it worth it, Ryan? The answer is no. It's not worth it, you know? You got a real house like that.
I've got a little one back here.
That's it, man. It's cool.
Go to bed, buddy. All right. And so, what was I going to say? I lost my train of thought there. But yeah, I mean, I've learned so much from you. You know, I'm thankful for you because, you know, I was able to get the money working for me again. You know, I put the money, I had the money in Scottrade. Scottrade, of course, you know, was sold to TD Ameritrade. And I was given the choice at that time whether I wanted to keep it there or move it. So I moved it to Merrill. I didn't know anything about TD really at the time. And that's kind of that's how
I haven't been able to track. You've bounced around from broker to broker, have you not?
Yeah, I went from Scottrade to Merrill, and now I actually moved it to Fidelity. Yeah,
awesome. I know.
I probably should have just kept it there because now Merrill has changed to free trading too. But boy, they were being a real pain before that.
I put Fidelity in the top 5. And honestly, if we can condense that down to new investors, I think JMac Investing would agree with me on this. He hasn't, you know, those opinions of people who are actually users of those accounts, that's huge, straight up. I mean, unless you want to freaking Google it and read testimonials all night about people's experience and how the landscape's changing, go ahead and do it. But I'd really rather hear it from somebody and their experiences. I've been pretty straightforward with my criticisms of Merrill and also my praise of Merrill as well. I mean, they don't have a high yielding savings. That's a big downfall for me. And I let them know it too, man. I do. They call me all the time for their stupid surveys. And I'm like, look, for the most part, yeah, but let's talk about the nitty gritty stuff that you guys need to do. But
and I have a first trade account for my wife. She has a Roth as well.
Yeah.
And so I kind of tinkered with a little bit of those. All those.
It's fun, you know, but I tell you what, 2019 was a transition year, and I don't mind you got to keep up with the times a little bit. And I don't know if those discount brokers are even worth it anymore. I really don't know. You know, I'm offering as an affiliate through the channel, but at the time it was a solution to a question that I kept getting. Hey, Ryan, how do you trade for free? And it was hard to tell people, look, you got to have these incentive thresholds. If you don't, you've got to invest and you got to build yourself up to those. That was the answer, you know, and people didn't understand.
My wife actually has an account with Merrill too. So I had moved her from Merrill to First Trade, but I only moved about 3/4 of it. So I think I'm just going to probably move it back to Merrill and I'll have one with Merrill and one with Fidelity for a while.
Smart. Yeah. I think those are both top tier brokers, man, both top quality. Put them in the top 5: Chuck Schwab, Merrill, Fidelity, TD Ameritrade. Not rocket science, you know. And we'll continue to push that out and revolve through. I know there's a few alibis that people have had some success with. You know, me in the military, everybody's on USAA, and I don't do my business with them. I think from a broker perspective, I don't think they're that good, and that affects a lot of people. People need to know that stuff. So. But I'll tell you what a treat. I really appreciate you kicking on, Jared. I've got another channel creator kicking in the group here, and I'm going to bring him on. He's a new channel creator. He's somebody I don't recognize very, very much, but we're going to bring him on. J-Mac's waiting.
Thanks, Ryan.
Get on here and talk. Jared, thank you so much, man. I really appreciate you.
Thanks, Ryan.
Take it easy. All right, brother? You got it, man. Yep. I'm going to bring J-Mac Investing in. He's going to show off his new studio, man, for sure. I've been giving you enough shout outs tonight, man. Seriously. Yeah, you're killing it, Jason.
I know.
You're doing great, man. What is it?
No, just the bull, you know. I'm still bullish, yeah.
Hey, man, that's what I'm talking about. I love it, man. It's great. How are you, Jason? What's new?
You know.
You always got something shaking. You got all that new merch on. It's sick. Hell yeah. I love it.
Yeah, it's funny. I the Teespring thing, you can get that when you're at 10K subscribers.
Yeah.
Well, my original hats that I made,
Yeah.
when I made those, that company sent me like an affiliate invite, and I didn't understand it at the time. But essentially, it's like one of those places where you can create designs and stuff, and you don't have to actually, you can sell merch, but you don't have to have any inventory. So I went ahead and created a few things, and I'm still, building out a few things, and it's just something for the channel. Just
you hustling.
Yeah, just hustling. Yeah, that's it.
I don't know. Listen, I'm a fan. I sit back and watch, and it's just fun to see somebody come on in as short a time as you and grow the channel. So, you know me, I've always been a staunch supporter, but I want to see the continued growth on the channel for sure. But I did specifically, Jason, call out the Wednesday live streams that you're doing. Thanks for doing that. I think it's pretty awesome. I don't want to speak for the group, but I just see some of the comments float through the thread, and people appreciate the hell out of that, man. So I missed it on Wednesday. How did it go?
It was pretty good. I knew it was going to be a little bit controversial because I had on.
That's what you said. I was wondering what you were talking about. That's why I wanted to watch it. To be honest with you,
it was because of the guest I had on. He's not really he's not a dividend investor. He's not an investor. He's a real estate investor, but there's also been a little bit of controversy with some of the people I'm close with, like because he's hustling real hard on YouTube and kind of rubbing some people the wrong way. So I knew there was yeah. So, but he's a cool guy, and like I appreciate his hustle, and he was like persistently reaching out to me. So I was like, okay, let's. And he was like, he said, I'll stay in the confines of whatever you set up, So in other words, he was like, I'm not going to go, off base or whatever. So I was like, okay, I'll give you the opportunity. I mean, somebody who wants to, get out there and they're working hard. That's how I was when I first started on YouTube as well. So, it was sort of a similar kindred spirit. So I was like, okay. And it wound up being, he was really laid back in the live stream. So I think it actually turned out not at all controversial. So
interesting.
Yeah.
You making any moves in the market? What are you seeing here? Obviously, some volatility kicking up. I'm taking a boring perspective, none of which I can sit here and display to the group. Oh, I'm buying this and that. I'm really not doing anything right now.
Right. Yeah. I mean, my holdings. It's been like I've had probably 25% of my holdings take huge hits, and then the other, there's probably another 25%. Like my recent Roth IRA, I set that up with a whole totally different. So my larger taxable account, that's a DGI account, and then I set up the Roth IRA, and I have a completely different strategy in that one. That one's more of a Peter Lynch, like. Try to like you and Jared were just talking about, try to outperform the market. And so I got 25 companies in there, and that's the goal. But it's a real long-term, it's companies that are probably 15 to 25% compound annual growth rate type of companies. So it's like, anyway, that's the strategy in the Roth. And so in that, I have the Amazon and the Apple and the Microsoft and the, and those are all just, killing earnings. So I got one portfolio where, it's had some real, some holdings got hit real hard. And then you had Apple and Amazon and Microsoft blow out earnings, and they're holding up the whole market. And I've got those in the Roth. So.
Yeah. Did you see your DGI fan? Did you see Minds in Motion? I've invited Minds in Motion. Yeah, I'll throw it on here again. I was here.
Oh, yeah, there you go. DGI.
Yeah, I've invited her on I want her on the live stream for sure, man.
Yeah. I want to do
the live stream.
You know what? I think I'm gonna do because I'm theming out my Wednesday nights too, and I'm trying to. And I learned a lot from you because my first year of live streams, it was me just testing stuff and me getting more familiar and getting more comfortable behind the camera live, you know?
Yeah. Yeah.
And,
if you don't mind me saying, man, it's, you evolve on YouTube just like you do as an investor or anything else you do. You know what I'm saying? So what the hell? I don't know, man. If you're not going to try, you're not going to get anywhere anyway.
Yeah. But I learned a lot from you for sure. And how you, even when you were solo doing them, you still had an agenda when you kicked off your streams. And so that's what I'm trying to do. And I think I want to do like a women investing. I'm going to do like a whole bunch of different themes throughout the year. And I like to have Marie on there too. Yeah.
Hey, Jason, do you mind staying on here with me? And I'm going to bring Steve in. He's a subscriber of the group. Do you mind?
Come on. No,
I'll
I'd
bring
love
it
to
in
meet him.
We'll do 3 at the same time here for sure.
That'd be awesome.
I think Steve might have some questions for us, actually.
Yeah.
Steve, you got me okay?
Yeah. Can you guys hear me?
I got you perfect, man.
Loud and clear.
Your mic's probably nicer than mine. Good grief.
Yeah, I'm not using a mic, but I hear you guys.
Awesome.
Yeah, today was quite a day. The market dropping nearly 600 points at one point today. You guys doing any buying today? I know, Ryan, you just said you weren't doing any buying today.
I mean, I was tempted. But again, I think there's kind of a 3-headed monster going on right now a little bit. I think the bond market is telling a little bit right now. Bond market in my portfolio has been up for the last week straight, every day. So it's, some concern there. We're obviously going to dissolve away from the holiday cheer. Whoopee! And typically I'm going to stop investing in January so heavily because I've done that in the last few years past. And I'm going to go back to a little bit more of a dollar cost average strategic buying and spread it out. I did mention funding the Roth, but I didn't buy a thing. And then the third thing, the systemic risk, there's 2 of them. And then I would throw in the obvious. I know you're in DC, Steve. So this debt has me worried a little bit. And it's something that nobody talks about. Nobody. So, with the few, I do think it's going to be a little short term. I do, with the virus, the coronavirus. And then obviously the impeachment trial. I think that's probably weighed on markets a little bit too. But Jason, what do you got?
Yeah, I mean, I think Dave, Hidden Freedom Investing, he was talking about it, that we're back flat now from January 1 till now. I mean, because it ran up, it was all-time highs, so it's it's not surprising at all that we're having a pullback. It's just it's surprising that people are surprised.
Right.
That's what because it could be anything. You could throw any headline out, and at some point there's going to be, 10, maybe 20% drop, which, and it could be more. But I mean, I don't know. Wait till you see my. I completely changed up my weekly update tomorrow and the thumbnail, and I've dropped the intro to it on. I actually even jumped on a TikTok, but I dropped it on Instagram. So you're gonna see it. It's a trip. It's Warren Buffett going thug life on everybody. So
I wish I was as technically savvy as you, man. But so Steve, have you been investing that long by chance?
Just 2 years. 2 years ago, I came into the market, like I mentioned last time, in 2008.
Yep.
I took some positions in there, and I, just like Jared Odell was saying, I really was buying into the wrong things. Had I bought at that point into a mutual fund or index fund that tracked the S&P or tracked the Dow or the NASDAQ at that point, I would have been way better off than trying to choose individual stocks, which at that point I didn't know how to do any type of analysis on them. I was just kind of throwing darts at a board and seeing what would stick,
Yeah.
So I kind of got burned a little bit in 2008. And then at that point, didn't get back in until 2015. It was really small scale. Like I mentioned Acorns before, really passive, really, really passive investing. It wasn't until 2 years ago that I started doing aggressive, $1,000 a month, $1,500 a month.
That's right.
Just plug away. And of course, now we're at an all-time high, but no matter what, the market goes up, it goes down. I have it set up, weekly, still cost dollar averaging. Of course, try to pick the best day of the week to do the buying. Like for instance, today market was down and was 500 when today, and I went ahead and sold a small position of a bond fund that was up today.
Yeah.
And went ahead and doubled down and bought VYMI, which I was actually getting. I lost some gains on that the last few weeks with this market pulling back. So I went ahead and bought a few shares of that and bettered my position there. And then also did my contribution to the M1 account, which I started that in late December.
Yeah.
So
which one's the Roth, Steve?
The Roth's with Vanguard.
I like the hat. Yeah.
Yeah.
I was going to call that out. Yeah.
Hell yeah.
No, the Roth is with Vanguard. The IRA was with Vanguard, the brokerage account. But I did start a IRA for my wife in M1.
Okay.
I started a secondary brokerage account in M1 for myself, just to kind of get more, get more into doing individual companies. Before that, I was getting maybe one dividend a month or several. This month in January, I think I received 12 different dividends this month. So that's kind of always exciting, dividend growth investing. You get that steady stream of income. Of course.
I was going to say, are you doing individual stocks in M1?
Yeah, individual stocks. I have a small portion of my pie and some Vanguard funds just to kind of balance it out. But for the most part, everything with M1 are individual companies.
Right.
Do you think Hey, Jason, I got a question. I know you had made I think on your video when you were talking about the Fidelity with the partial shares. I know you were quick to get that out. I appreciate you doing that. But are these discount brokers? Do they have enough footing to stand the test of time, or are they done?
Yeah, I mean, it's M1 and Robinhood, they probably, I've had a lot of conversation with a lot of people about it.
Robinhood does not offer retirement accounts.
They don't. But here's the thing: Robinhood broke down the door for free, commission free, and then M1 broke down the door for fractional shares.
Yeah.
So those two sort of, built a really good base. So I don't know that they'll go away, but even me, I'm a big M1 fanboy, but I'm looking at and part of. I mentioned it in that video. I intentionally filmed that video. I work from home, I work remote, so I was working. I got the news. I saw that. I was like, you know what? I dropped everything at work, and I created that video, and it was in raw emotion, because I wanted to. Because I really do. I'm a huge Fidelity fan. So Fidelity and M1, but as soon as I found that out, I was like, you know what? I'm gonna go ahead and probably switch everything over to Fidelity. But I think after, I said that in the video too, but after thinking it through, I think I'm going to keep one account with M1 and then move my larger account from my taxable, because the other part of it is that taxable with that's my larger account, and I can move it to Fidelity, and then I can utilize the whole suite of strategies, like with over 100 shares, you can buy covered calls and all those kinds of things. You can't do that. You can't do that with M1, and you can't really buy dips with M1 because you got the windows. You know what I mean? I mean, you can buy dips, you can buy long-term dips, but you can't buy them midday. You know what I'm saying?
So I mean, that brings me back, Steve. What's been your experience with M1? I've got 2 brokerage taxables with them, and I definitely have my opinion. Try to be as transparent as I can. The trading window is a big downer for me, straight up.
Yeah.
But for the most part, it's fun. Obviously, if people read between the lines as far as my commitment to M1 Finance through my channel, it's indicative of the fact that I have less than $10,000 with them. So comparatively speaking, a pretty small part of my wealth is with them. But what's your thoughts on them? Are you satisfied with? Because I get nothing but positive through the channel, straight up.
Right.
Everyone loves it.
No, for a new investor, I think it's really popular with millennials. I think Robinhood and M1 for new investors, for millennials, I think it's really user friendly. The interface, Everything about it, it's so clean. I think M1 will probably, if it was just my opinion, I think they'll probably stand the test of time. Of course, the more you invest, you may want to go to, do something with Fidelity. But I think it's just really someone who has no experience investing at all can go on there and do the research on the companies. Something that the pie aspect of it really breaks down what you're doing. And you don't get that with, a Vanguard or a Fidelity. It's a little bit, when you approach a Vanguard or Fidelity, there is a little bit more, not fear, but it just feels more overwhelming, I think, than it does with M1.
Yeah, so, I think to piggyback on what you're saying, it will be a good, the first 100K, you could, M1 would be a great, place for the first 100K,
Yeah, I wouldn't have M1.
Jason?
Well, yeah, I mean, well, I don't know, maybe that's
just hit a benchmark. I'm aiming for my long-term plan, honestly, guys, to be honest with you, all three of these discount brokers will be condensed and brought home to Merrill eventually. Okay. And I'm pretty open with how I'm building the first trade. That's where the YouTube earnings goes, right? I don't do paycheck videos. I just don't do that. I can't bring myself to do it. But that's my way of indirectly kind of telling the community, what it can mean if you start a YouTube channel, and how serious it can get. Now, that's just the ad revenue aspect. I don't disclose the affiliate stuff, but for the two M1s, I'll eventually bring those home. And those will be part of my larger taxable account, which I envision being the largest account that I'll hold into the future. I do believe that. And so these little feelers that I've got strategic goals for each of them. And when I reach those goals, there's no love lost, baby. I'm out. I'll bring it home. And so that's my plan. But for the time being, it's good. But I like, Jason, what you said about, getting up. It was the same rule I had a couple of years ago when I was recommending people to these discount brokers. Do what Steve's talking about, getting yourself used to it, freaking investing, I mean, if you can get excited about it through a platform like a Robinhood or an M1, whatever, then it's done its job. But when you start to get into some of those advanced analytics and stuff, I couldn't see moving away from what Merrill offers. And Jay, you touched on a couple of them with Fidelity, those research.
Well, because another good part of M1 was the M1 borrow, but with Merrill or Fidelity or Charles Schwab, you can use margin loans, and so you can still utilize your portfolio. I mean, I'm not advocating it. I'm just saying with M1 it is really easy to, let's say you had an emergency bill come up, $2,000 or something like that, and you can utilize up to 35% of your portfolio. And it just automatically obviously no credit checks, no nothing. You can, so you can use your portfolio to leverage, emergencies and things like that. If you don't have the cash in savings, which, we're all investors.
Is that the elite service, Jason?
No. That's the basic. The M1 bar. You just have to have over 10K in your account. If you got 10. Yeah, there's like a 10K. Once you cross 10K, then you can leverage 35% of your portfolio.
Wow. Shit, man, I got to be a player. I'm just a little fella with M1.
But I researched Fidelity. They got the same thing. It's called margin loans with Fidelity. I didn't even know it, but so same thing. So there's so that was a cool part of M1 as well that I thought, but it's all covered with all the other, but I mean, it's they're now the pie structure is very, very unique and very easy because you can get real fancy with that, and you can have multiple hierarchies of levels of pies, and
there's some ugly pies out there, I'm telling you, man.
Yeah,
there's some ugly pies, I'm telling you.
Yeah, there's some fruitcake pies, right?
Oh no, mine's a good, nice, clean pie, man. I like it clean, man.
Yeah, sometimes,
Hell yeah. So, Steve, what about Vanguard as a broker? So that's one that people ask me all about, and they get confused a little bit. I'm a big proponent, owner of, and advocate of the product. I know Jason's big on Fidelity product, but you can own those products in any broker. How are they as far as a broker to hold an account with? What's your thoughts?
Well, I think they're pretty great. I think there's great customer support. I think they have great products, and I haven't had any complaints with them at all. Of course, I think you probably can get very similar products at Fidelity. But between Vanguard and Fidelity, the only thing I don't like about Vanguard, the only thing, and I hope they change it in the future, is fractional shares. I think that is the biggest thing right now, is that if it wasn't for, that's why I opened the M1 account. I would never have.
Jason's like, yeah.
I would never have an M1 account by itself. I feel like for me, it's not enough. I have to have, Vanguard. I have to have another, I'm not gonna say real account, but I have to have something else going.
No, I think that's fair. Major broker, I do. And that's why, Jason threw out $100,000. I don't know. I'd be a little more conservative and put like a 25. If you really like it, go to 50. But that's one thing. I really enjoy Joe Carlson. I think he's one of the best on YouTube. I really do. Just got solid. What you can take away is, that guy believes in his system. But it's interesting, the level of devotion on the M1 Finance platform for sure. And it's working for him, not to say that it would work for me in that camp, because I think there's some analytics that you kind of put to the side by really putting all your chips in M1 Finance, but I think it works.
Well, go ahead. No, you go ahead.
I like how Vanguard has, they waived the fees. I guess they followed suit with everybody else. Everyone else was doing it. Merrill Edge and Fidelity, they waived the fees. So Vanguard has followed suit with that, which is good. That helps them out. But I really feel like they're going to have to start doing fractional shares sometime this year or next. I think they have to do what everyone else is doing. Keep pace, I think. That'd be the only thing I want to see Vanguard do going forward. I would be tempted to actually move to Fidelity. I just opened the HSA, as I mentioned last week or a couple weeks ago, with Bank of America, because I do have a checking account and a saving account with Bank of America. But of course, they're charging me a monthly fee, which I think Fidelity actually will waive that if you have accounts with them. So I try to keep everything under one roof, which is kind of difficult now because I have everything sorted out between Bank of America, M1, Vanguard. It's all spread out now. But what I use to actually kind of keep it together, I use the Personal Capital app or website. I'm not sure if you're familiar with that. Personal Capital.
I am. I'd like you to share what you think, Steve. Are you liking it or how?
I love it. I think it's great. You can log in. You can see your net worth on a chart for the year, or you can see it for multiple years, how it's gone up, how it's gone down. You can see where you're spending. You can see how much your net worth has gone up on a weekly, monthly basis. You can go into the investment side of it and see, all your accounts compiled together. What percentage are you up or down? Especially if you're in a situation where your accounts are in different institutions, you can see on there how much cash you have, what investments you have. And actually, a good thing is, I was weary of it at first, but then I did my research and found out that the software that Personal Capital uses, I was told is Plaid, I think it is. And I think that was recently acquired by Visa, I think it was. Correct me if I'm wrong, Jason, you might know.
Yep.
So, this software that Personal Capital uses kind of protect your information. They don't store passwords or anything. Is the same software that Visa just paid a ton of money for. So it's very safe to use. So I don't know about you guys, but I use Personal Capital on a weekly basis because of that reason.
Yeah, and I think if you're finding value, I was tempted. I use the application actually through Bank of America. It works pretty good for me. But I do the old school spreadsheet for my actual financial planning worksheet. So I just keep that running Excel spreadsheet, and it works really well for me, really well. But it helps. I tell you what, it's really telling for anybody out there that's looking to invest, but you've never put pen to paper for your budget. You got to do it. You have to. You will identify expenditures. I'll bet you'll be able to trim 20% of fat right off of your budget. You'll find some surplus capital. You'll also find things to where, like, insurance is a big one. If you're not shopping out your insurance every now and then, You notice how the insurance goes up a little bit for no reason. Shop it out every 6 months to a year. You'd be amazed at how you can get in at a lower rate. And my loyalty to the insurance companies, I tell them every time, look, if you could just give me a nice low rate, I'm a good driver, I have a good record, you'd have a customer for life, but they seemingly don't get it. So my loyalty goes only so far. You know what I mean? Shop that out for sure. You can find some good stuff. There was a couple comments that came through here. I want to throw this and I want to get everybody's opinion. I definitely have mine on it as well. There's definitely some positive to be taken from this. It's a really smart comment. I like it. And it might be a little bit snide, but I think it's true. And it speaks to a grander perspective, I think, for people who are investing and have the ability to fund their account really, really aggressively, as opposed to those investors that may not have a whole lot when they start, you know. And if you could just speak a little bit about that, Jay and Steve, if you want, I can kick it off or let you guys go first. But I definitely want to comment on that for sure, because I feel like a lot of people tune into a Gen X dividend investor and they're like, I want that, but they're not willing to take the first step forward to make those results happen. They watch a Joe Carlson and they're like, wow, all they see is that straight line on M1 Finance and it's going up. What they don't see, and he admits to that, is that he's made investing a number one priority for himself, you know? So he's investing the hell out of that account. Boom, boom, boom. And people look at that and they're like, wow, this guy's a successful investor. I can replicate that. And I think that's a real danger to the community, man. If they're looking to become a dividend growth investor or they're looking to do passive investing, that they're trying to replicate another program of somebody else. And I just think you're setting yourself up for some level of failure. And I would really love people to just consider taking that first $100 and that first $25 and start grinding away. You guys got thoughts on that? Love to hear it.
Yeah. It was just today, a good friend of mine sent me a chart, and it said that the top 10% of the wealthiest people in this country invest. They have 60% of their capital in equities investing, not not liabilities. And then the bottom 50% of the population of the country only have 4% in equities, and mostly depreciating debt. And that's the biggest thing people keep talking about, whether it be Joseph Carlson, or if anyone listens to Dave Ramsey or any of these people online. If you're so swallowed up in debt that you can't afford to make these weekly investments, then you're going to have a problem. But I would tell someone or 1,000, like Joseph Carlson saying he invests $1,500, $2,000 a week. That seems, but everyone's situation is different. I think he said that he had most of his mortgage payment was very low and all this stuff. So he has a great job. He's able to do that. So everyone's situation is different. I think the less debt you have, obviously, the more you have to invest. But I think at some point you just have to jump in and get your feet wet. If you don't do it, then you'll just keep saying, "Oh, I'll do it next time. I'll do it next time." Then, like Jared Odell was saying earlier, he had his money in cash. And that's not a bad thing either. But had he jumped in earlier, that's always the thing, trying to get in earlier. So time in the market is always the best thing, as opposed to trying to time the perfect time to get in. It's just get in and start building a position. What do you think, Jason?
Yeah, I mean, for sure. It's and you can scale in, as you begin. Just beginning is the a lot of times the hardest part, and beginning and then staying invested and not not really panicking, in the beginning stages. Can you hear me?
Yeah, I get you fine, Jay.
Okay. So and you look at so I started 9 months ago, and my portfolio was 10 grand, and it's up to 35,000 in 9 months. So I'm fairly aggressively investing as well. I don't have the same capital intensive as Carlson, but I mean, it became a much more of a priority. And then as well, that's
the key, Jason. What you just said, it's a priority, right? You built that, you tripled the portfolio, and there's something there to be had about new investors who think that because they join this community, automatically, by nature of osmosis, they're going to be able to triple their account as well. And what I take away from that is you've made investing a little bit higher priority for yourself, And if you compared it to how you were maybe a couple years ago, Jason, right? Is it now more a priority than it was before? That's the critical takeaway for people. And that's the awareness piece. I don't want people to join this community and be like, God dang, this is incredible, man. I can join this community free of charge and I don't have to take any action. But if I can just follow these guys or really intently pay attention, it's going to happen for me,
Yeah.
I think there's a deeper perspective and a deeper takeaway. And I think what I want people to take away is that you are an example. I am an example. Steve, Jerry, who I'm about to bring on to the channel, are all individual examples. And we've all sought success in the market and we're all freaking realizing it. We're just doing it in different ways. And I think that to a new investor, man, if they're freaking paying attention, that's the real key. They can tune in and be like, hold on a second, man. I don't have to be like a J-Mac investing. I don't have to be like Ryan with the independent investor channel. He's been investing his whole life. Oh, hell, I'm going to throw in the towel. I can't do that. Nah, garbage. Get on board and do it, man. You can do it.
Yeah, it was just at the end of the year last year that I reached the threshold of $100 in dividends per month, right? So because that's also frustrating when you first start and you hear people, when you watch these videos, people talking about passive income and dividend passive income, and you're not making but like $5 or $10 a month. And so it's real frustrating as a new investor. But the thing is, if you press through that and you keep reinvesting, that $10 becomes $15. It's incremental. It's so incremental, but it's that incremental small, amounts. It's just so powerful. And then it becomes, 10, 20 years later, then you're looking like Gen X, where it's a Gen X dividend investor, where you don't hardly have to fund the account. Nah. It's fun. It's funding and reinvesting into itself. It's like a machine. But absolutely. you gotta keep doing the little things in the beginning and not get frustrated and not pull back and find other ways. If you gotta something come up, find another way. Don't sell your shares. That's my thing. Find another way.
Nah. There's no selling in this community, man. We're good. Yeah. Hey, Jay, I'm going to do a little shuffle on the channel. You're welcome to stay. I'm going to bring Steve on. I'm going to say goodbye, and then I'm going to bring Jerry. Jerry's in the group here. He's waiting to kick in the studio here, and I definitely want to bring Jerry on, and I haven't talked to him for a while.
So, cool. Yeah, I'll be in the comments. I'll hang out.
Yeah, man. Help me monitor this crew. I got to keep up on some of these questions, man. It's blowing me away here. So thank you, Jason. I really appreciate you kicking on, brother. All right.
Thanks for having me on.
Be well, bud. Yeah, man.
All right, now.
Mm-hmm. Jerry, my man, what's going on?
Hey, how's it going?
I'm gonna bring Steve on real quick. I might have him say goodbye to the group real quik, and then me and you are gonna talk turkey, see where we're at with the stock market.
Right on.
What's going on? Hey, Steve, I know you dropped off the line there, man, but I don't want to leave you hanging like that. So. I might go live here with Jerry and give Jerry some time here on the live stream for sure.
That sounds good. I just want to come in and say thanks a lot. It's been a fun night so far, and I appreciate you having me on.
My pleasure. I'm on your time, man. This is fun for me. Come on, man. It's all good. I get stoked when you guys pop on here and want to come on and support him. It just makes for a better live stream, in my opinion. Bringing people together, baby. That's what it's about.
A lot of fun. I appreciate it, man. I'll see you in the comments.
Be well, Steve. Take easy up there. Yep. Bye. Jerry, talk to me.
Hey. So yeah, I was can you hear me, by the way?
Yeah, I got you loud and clear. Perfect.
Okay. Yeah, what you were speaking about just earlier, I always wondered whether I was bad for new investors because I don't follow the popular, I mean, I do in parts, but a part of my portfolio is pretty high yield, high risk, and I made a video of that. I might have released it, but I always wondered whether I'm bad for that.
Yeah.
Like, because even in the Discord chat, there's people asking for certain stocks, opinions on certain things, and I might buy into those personally, but that might not be the right fit for somebody else.
Yeah, I hear you. It's funny. Me personally, I don't follow the big channels. Obviously, one of my friends in the community, Ryan Scribner, who I know personally, I've told him I don't watch his content. I don't have that kind of time. Like, I wish him all the best. He'll be at 1 million subscribers. Graham Stephan with 1.5 million, and Jeremy with the financial. We just have a difference in philosophy. We're like oil and freaking water as far as I'm concerned. So I don't watch his channel either. I wish him all the best. I certainly do. But I like to spend my time. I think the best YouTube channel on YouTube right now for finances and investing is Gen X Dividend Investor. Number one, freaking number one. This is my opinion, and I've earned the right to offer my opinion to number one. That's just the way I feel.
Yeah, I think that's kind of a no-brainer there.
He has 2,000 subscribers, Jerry, right? So
right.
He must not be one of the top dogs. See, I've said this many times on the channel. I just don't buy into that garbage. I'm interested in quality. I'm not interested in your subscriber count. I could give 2 shits less. Right. I don't care, and that's what people have to realize, that, man. And it means so much for me to hear you say that, because it makes me think that you're thinking about how the message is received. It's so difficult. I know there's people who are going to get involved in the market, and I know the market can really, really be, I use the word humbling all the time, but it can be downright nasty. And if you think I'm going to come onto YouTube for one night after a day like today, down 2%, and be like, it's going to zero. Nah, I don't play that game. I don't. Yeah. But it can get dirty. Straight up. It can get dirty to where every single savvy investor, and especially new investors, are going to second guess what the hell they're doing. And they're going to be like, what in the hell did I get involved with? And the more we can prepare people and move them away from what freaking perfect stock is going to, magically make their portfolio, if we can, that's the easy part, man. That's the easy part. I don't know. I'm just glad you said that, man. Sometimes I wonder.
It was, I'm kind of glad for some of the new investors that we're having this. I hope we kind of have this pullback a little bit more, because there's some good lessons involved in that. When I first started, I think I started investing in, I want to say August of 2018. Yeah. And so it wasn't 3 months in and we're having a 20% correction in December. And I had to walk through that and figure out, and I didn't do a good job of it. It made me panic, just like probably most of the new investors are going to do.
Oh yeah.
So I think everybody needs to go through that. I just hope they don't get shook out. And just say, what, they said the stock market's going to go up forever. And here I am 20% down. I've only been in it a month. And I think you have to go through it though, because I'm a much better investor now than I was in December of 2018. Wow. And my portfolio is still a big work in progress. There's some positions I need to clean out, chasing high yield and all that stuff. And, it's a work in progress. So
what do you mean by that, Jerry? Chasing high yield, buying stock just for the dividend?
Buying stock just for
you
the
got to be careful with that crap, man.
Yeah.
I'm telling you what, some of the dividend growth investors, it fits for them. but that message isn't conveyed. Seasoned investors like myself, I'll sit back and say, yep, it fits. It may fit with a certain percentage for me personally, but it certainly does not fit for everybody. It really doesn't. For a lot of new investors, what they need to do is they need to save up to that first $1,000. Okay, $1,000, freaking savings account. Don't talk to me about any putting capital to risk. All right. Now, then you have to determine your tolerance to the market. For example, if your tolerance is a 10, if you're a high risk, aggressive investor, yep, you can take that full $1,000 and you have to invest it. But there's a caveat to that. You can't just say you're an aggressive investor. You have to be an aggressive investor. And a lot of people have a hard time with that. They'll say, yep, I'm a 100% aggressive investor, Ryan. First dip of a haircut in the market and boom, they're panicking to shit and they aren't sleeping. You know what I'm saying? And what people need to realize is they need to take that $1,000 and they need to be okay with taking 20%. And this is relative. Doesn't matter if it's 10, doesn't matter if it's 25, 50, 100 grand. It's relative. Okay. To having the discipline to just taking 20%. Hey, market's at an all-time high. My risk tolerance really isn't indicative of someone who can take a big wad of cash and dump it on the stock market and be okay with that, you know? And there's been 100 ways to Sunday that I've said that same thing, you know, Jerry, right? And I hope it resonates. I agree with you. I don't think we're going to get through to everybody. The last thing, I don't want to see people get hurt either in the market. But man alive, at the end of the day, everybody in this community, seasoned investors and beginning, will be asked at some point to take some personal responsibility over their own program.
Yeah.
And I think there needs to be more people like myself saying what I just said. It's important.
You know what the reason why I said I wonder if I'm bad is because I made a video about 3 stocks with a 7% or greater yield.
Sure.
Of course, that was a popular video.
Yeah.
But if you didn't watch the whole video, you wouldn't have gotten my point at the end where I said, don't buy them, basically.
Yeah.
And they probably didn't, because I got a lot of comments and they said, oh, that stock, cool, I'm checking it out. And I'm like, no, don't. But, you know, that's kind of tough being on YouTube and trying to share your ideas. And then, you know, you can't control what people listen to.
That's the thing and I know, man, I try not to be that guy. You know what I'm saying? Like,
yeah.
nobody comes onto YouTube to listen to somebody be like, you're not my dad. Like, get off my, you know what I mean? You know, get off my program. I can do what I want, when I want, how I want. But here's the thing. There is some value for folks, you know, that have been investing for a while that can really visit those mistakes. And if people are really willing to listen, they really are, they can circumvent some of those. You know, I wish I had the ability to talk to myself 20 years ago, and I'd be talking the same way that I address my message through the channel now at 42, because I just think a lot of people waste time. They waste time by exploring this one thing, looking for that needle in a haystack, trying to find that mysterious answer to the stock market, thinking that they're the only ones that found it. You know?
Yeah, I was trying to talk a guy off the ledge last night on an 8% ETF that I'm invested in. Okay, but you know, I'm actually looking to get out of it, but I'm different. I'm investing with a 10-year window. That's what I have.
Yeah.
And I asked the guy, I go, what is your window? He goes, I'm going to invest for at least 25 years. I go, then you don't need to be looking at this. You have all kinds of time to not worry about trying to get the highest yield. You can get quality companies. If you got 25 years, stop panicking. Just do the smart thing. Don't swing for the fences if you've got 25 years ahead of you. I mean,
it's a luxury. You know?
Yeah, it really is.
It's got to mean more. Like that 20% to the $1,000, blah blah blah. that if that makes sense for you, or you look at that and say, yeah, God, Ryan, I don't know, man, 20 is a little light. Can I boost it up to 30? Yeah, as long as it makes sense for you. Now you're thinking, you know, but most people want to just be like, I'm going to save 1,000 and I'm going to invest 1,000, right? And that's they don't think any deeper than that to say, okay, I hear you out. I want to invest half of that. I'm acknowledging that the market's at an all-time high. Maybe I scale into the market. Maybe I start with that 25%, right? And I put a little pay dirt on the side here. I continue to build the cash. Maybe I dollar cost fund that a little bit from the inflow of paycheck that I'm getting. Now you're wealth building. Now you're wealth building. You're not trying to, put that $1,000 away. And I always say too, Jerry, the worst thing that can happen a lot of times is that $1,000 gets put away in a higher growth vehicle and they make 20%. That's some of the worst things that can happen to a new investor, because they're like, all right, I'm going to join this freaking community on Friday night and I'm going to tell them how badass of an investor I am. I'm up freaking $200, man. It can be the worst thing. And I don't mean to be that way, but it's true. Because the psychological, you're like, wow, I can beat this thing, instead of taking your lumps a little bit. Because I agree with you. I think you got to have some of those lumps a little bit to render some of those successes, and know how to handle them. I don't know.
Absolutely. I mean, we're talking about, I see panic out there right now, and it's like,
yeah,
why are you? Where is the panic? I don't see it, because if you put it in perspective, we ended today. The S&P ended today pretty much the same point it ended December 31st.
Yep.
So there's nothing going on. There's nothing wrong with the market. There's nothing. It's not.
My only disappointment today, Jerry, I was really, really tempted on the way home, and I didn't have that much time to buy. I can buy after hours, but I don't really like doing that because it gets a little bit shady with the limit price and blah, blah, and you don't always get the good price. That was my only disappointment today, is going through a 600-point down day and not buying anything. If you want to glean a little bit of a page out of my playbook, that would be, it's amazing how I look at my portfolio. I was down $3,200 today. And I'm disappointed that I didn't buy. That's perspective.
Right.
I don't know.
Yeah, I didn't get to buy today either, but there will be more opportunities coming. So
yeah, I think so. And that was part of my hesitation, is I thought, maybe I'll hold off and just be an investor.
Yeah.
You don't always have to be moving and jiving and buying and jockeying with stuff. I think holding is an underutilized tool for any investor.
Yeah, I saw what was going on in the morning, and I said, "Oh boy, okay, I'm going to walk away." That's basically what I did. I'm going to walk away.
Watch it. Yeah, exactly. Well, I don't know. So, how's everything going for 2020? You're in California. I know you obviously caught the Kobe news. That was pretty tragic this week, man. I've been pretty down ever since then.
Yeah,
pretty tragic situation, man. I don't know. Brings it into perspective, I think, it really does. It's
a horrible thing when things like that happen, and it hit my wife hard. It really did. I mean, she's been, because I feel bad for the kids, the wife and kids. It's like, my wife told me, I don't know what I'd do if you and, our son just disappeared.
That's what the deliberation everybody's going through.
And I feel the same way. It's really horrible on the children and the wife, obviously. But that was bad. That was bad.
A lot of people don't know they hit communion service that morning.
Mm-hmm.
A lot of the undertold part of the story, And
it was so strange because they released the pilot. What do you call it? The pilot communication, the recording.
Yeah.
When he was talking to traffic control.
Yep.
And there didn't sound like any panic. There wasn't. It didn't sound like nothing was wrong.
Nope.
It sounded like standard operating procedure.
Yep, completely disoriented as far as the position. Yeah, it's crazy, man.
Yeah.
But yeah. So, what are your plans for 2020? I mean, are you making any moves in the stock market, anything like that? Any plans for the channel, goals, that type of thing?
No plans for the channel. I'm just going to share. I don't like to call myself a creator because I'm not.
Me either.
I'm just not. I'm not gonna edit anything. I'm gonna put my little cartoon things up every once in a while and make people laugh. But I'm a sharer. I'm not a creator. I share. I don't create anything.
I just ask you to be Jerry. That's it, man.
That's all I'm gonna be. I'm gonna share what I'm doing, and a lot of me with this YouTube channel is kind of selfish in a way, because it keeps me motivated to continue doing what I'm doing, and it puts me on record. Like I watched some of my old videos and I'm like, holy crap, how many times did I change my M1 Finance account? And I still am. That's one of the things I do not like about M1 Finance. It's so easy to go in there, click, 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 and you've just made 20 sales and 20 buys. It's a little too much.
Are you doing that in a Roth?
No.
Are you concerned at all about that? I mentioned that on the last video that I put out about that rebound. And I don't know if I'm right or wrong. I don't know. But I'm really, really skeptical on hitting the rebalance button.
Yeah, I wouldn't do it.
I said not to, because I do believe that could trigger some short-term trading.
Oh, absolutely it can. Oh, yeah. I mean, but for the most part, I got less than $2,000 in there.
Yeah.
It's not going to shake a stick as far as taxes for me.
What about a SEP for you? Can you do a self-employment IRA?
I could, but to be honest with you, I don't make enough money to even make it worth it.
Gotcha. So you got the tax. Yeah.
By the time I deduct everything and get my income down as low as possible, it's really, there's nothing. I mean, it's fine.
Jerry, the crazy thing about investing, man, is it's relative. It really is. I freaking mean that. I know people that make hundreds of thousands of dollars and they don't have 2 nickels to rub together.
That's true.
So, I mean, if you want to say that, and that's what I don't want people to get from at least my message specifically. I don't want them for Gen X, not to speak for that. I want people to hear what you just said. Like, hey, I'm a working guy, because trust me, you're not the only one. The majority of people out there are working for a living. The majority of people out there, a $400 unexpected expenditure would put them into some form of financial ruin. Yeah. The majority of people out there have, the average household debt's $14,000 right now, bro. 14,000. So the majority,
14,000
household debt unsecured. So we're talking credit cards. You're not talking about any type of collateral debt. You're talking about credit card debt.
I was at 30,000 in 2008.
Yeah, yep, I've been there, done that too.
Now I'm at 12.
That's awesome.
So
yeah, and once that gets paid off, that's the key. That's going to feel probably one of the very most one of the coolest things that I've ever did in my life was pay off debt. Mm-hmm. This investing thing, yeah, it feels good, but you can't really enjoy investing to the full extent while you're being consumed on the vacuum side of zero.
Debt is the, and that's why I don't like some of these big channels, because they always I shouldn't say always, but they flash this car and they flash these homes and they flash stacks of cash, and it's like, man, I make,
how does it help people?
I make 40 grand a year, and most of the people that watch YouTube probably make that or less. What the hell? What are you doing?
Well
Do
said.
you really think you sitting there making 40 grand a year, you working your 9 to 5 is going to be that person. You could, but the chances are you're not. So what can you do to improve your situation?
And see, those are the people that need to, those are the people, Jerry, right there, that you got to get through to.
Mm-hmm. But
in my opinion,
because they're they see the bright lights in front of them, and it's hard to get them to turn to say, I mean, it's just like the people that say, oh, by the way, it's now 3 million. People say, oh, you need 3 million to retire.
Well, I don't think like that. I don't think like that
either, but that's the new thing coming out now is you need 3 million, or Susie Orman said you need 30.
Yeah, whatever. Like, I told my daughter just today, don't ever allow society or society's views or goals and aspirations define your track in life. I just said that tonight to my daughter. Here's the thing. That is offensive to people from around the world, all right? Not just this country. I was rapping with Jamie, and before the live stream, we were talking behind the scene, which I will say, I'm going to open that up a little bit before 9 o'clock. So if anybody in the thread picks that up and they want to come in and rap with me before, they're welcome to do so. But we were talking about some of the foreign investors that straight up don't have the opportunity that we have. They don't have it. So it's offensive, man, for people to come on and pose, because look, if you can get through to that person who makes that 25,000, the salary, and you can get those people to understand how important it is to siphon that $25 off of that inflow and put that money to work over time, I'm going to be frank with you. You're not going to be a millionaire. Get over it. Get over it. But here's the thing. You're going to be reflecting back on your life at 60 years old someday. Are you going to reflect back, option A, and say, I never did anything to build wealth or contribute to my financial future? Or are you going to be in option B? And you're going to be like, you know what? I started with what I could, when I could, and I did what I could, when I could, right? And now I'm sitting on X amount of dollars. You see how I don't use the amount of money? Because it doesn't matter. And that's the degree of separation that I talk about that's so important. We always want to just look at people who make 25, 40,000 and they're in poverty in this country. But bullshit, go abroad. Go abroad. People don't have that kind of opportunity that is available in this country. So if we can provide that degree of separation from what you're predestined to learn or to earn over the course of your life with that anemic income, how you putting food on the table, bruh, with that. If we can get through to those people and those folks can separate, put themselves $100,000 away when they get a little bit later in life, that's a success. That's a success. I don't really care about being a sheep that follows somebody that's got $3, $4, $5, $6 million put away, and they come on and they don't say the first thing about how a beginning investor can start to define that degree of separation. That's real talk. That's real talk. And
I mean, you have, like you just said, you have to do what you can do. And if you can just grasp, just that little thing, just if you could just take steps toward doing it. And a lot of these people that tell you that you need X amount, they have a vested interest in keeping you working, keeping you investing, keeping you from retiring and enjoying your life. They might be selling a course. They may need you to put your money into this managed account. Oh, you need to buy this whole life insurance. You need to do this. You need to save $200,000 because you're going to spend. That's what a retiree is going to spend in retirement for health care. So you need to save $200,000 just for health care. So all they're doing is putting fear into people, and
Yeah.
It's ridiculous. It's ridiculous.
Yeah. It's tough not to get caught up in that in our consumer driven society here in the US. But I tell you what, man, a lot of US citizens, they really buy into that. And it's just like they find every excuse, man. You seem like a super chill guy. And I tell you what, when I reflect back on when I was a fisherman in Alaska, that was some of the most stress-free, fun, carefree, dangerous as hell. I could lose my life at any time type of work. I was the most free, carefree, happy, living life, you know. And then I meet these people who seemingly have it all, and they're just so stressed out. They're so stressed out as they trip and they fall into their Audi. It's stressful, you know?
Yeah. Yeah.
Perspective, baby.
It's perspective. Months ago, I was driving to pick up my kid from school, and I pulled up to the stoplight next to this, I don't know what it was, Lamborghini or Ferrari.
Yeah.
And I looked over at the dude driving it, and he was sitting there just
happy.
I'm like, what the hell's wrong with you, bro?
Oh, man, I'd have a grin ear to ear.
Yeah.
But
I get to the next light, and then there's this dude in this beat up Honda. He's got the music blasted and he's bobbing his head, and I'm like, what the hell is that? What kind of picture is this? Like, who would I rather be? I'd rather be Honda dude.
It's just, I don't know, man. It speaks to, that's what I liked about you. Honestly, the first time I was introduced to you is that real talk. I meant what I said. I didn't say that to be cliche. I said it because I meant it. I want you to continue to be you. I hold myself to that same standard. There was some real talk as well before the stream about my motivation for this channel. It ebbs and flows because I go through that deliberation where it's like, okay, now I'm a little bit against the grid to provide content, right? I've got, still a small channel, but large enough to where there's a little bit of pressure, and I don't like that. I don't like feeling like I'm on the grid, to have to provide content to the greater animal, which is Google, YouTube, I just don't like feeling that way because it's like, my intent is becoming to be pulled away from what my 100% intent is directed towards.
Mm-hmm.
And, it's cool. It's cool when the subscribers like Steve, and I don't know if you were on when Jared Odell kicked on here too, Jared.
Missed it.
God dang, man. That's stuff for me. That's the payment on the channel for sure. Mm-hmm. To kind of come full circle. But yeah, I don't know. You said some cool stuff tonight. I'm going to rewatch this, and I really appreciate you coming on for right sure.
I appreciate you. You and J-Mac got me on these lives, and it really helped me out. I doubled my subscriber count since the end of December.
I don't know stuff like that. So that means a ton to me. I just put that in that exact same category, and good on you. I think it's awesome and well earned. As long as you're finding value in it. That's what I come on, and I'm a pretty selfless guy. I don't do this crap for me. I think if we're going to get somewhere, I think we're going to get somewhere together.
Yeah.
And that's the cool thing about investing. You're doing your thing, and some of these other folks that declare what it is they're doing and making investing work for them. I think there's some real takeaways for new investors who come on and they're like, you know what, I want to write my story.
We just got to get people to do it. And that's the hard part. That's the hard part of anything. Like I made a video, and it was pretty funny because I talked about crap. Crap is the key to success, because if you wish in, you ever heard the saying, wish in one hand, want in the other, or wish in one hand, crap in the other, and see which one you get first? You never heard of that? So put a wish in one hand and crap in your other hand and see which one you get first. Well, you get crap because you actually have to do something to get crap in your hand.
Yep.
So crap is the key. So to take action, the reason why you got crap in your hand is because you took an action. So stop wishing and hoping and start taking action is all I'm saying.
That's it, man. For
That's
sure.
really what it is. So
I don't know. Take an action, and then there's no guarantee after you do take that action, you know?
No.
So we try to prepare people with that little bit of a realistic expectation. And that's that learning that you talked about, watching your money fluctuate like today. I mean, I just disclosed what my retraction back, and it's not a loss. Okay. It's an adjustment down after one day of 2% in the market. Whoop-de freaking do. And I hope new investors look at my face and see how serious I am about being disappointed I didn't buy today.
Yeah.
There's some real takeaway and how to beat this market and beat it in a way, not to seek alpha. I'm talking about beat it over the long term. When you're that 60-year-old and you're reflecting back and you're saying, God dang it, that was the best decision I made in my life. I remember that day that I became a wealth builder, and the scary piece of it is, at least I can start some of these deliberations, is to think, man, what would my life be if I hadn't have done that? That's the scary part for me. It's hard to imagine life without it.
That was a good point, because I remember, as a younger guy, always saying, oh, it's easy for these rich people because they got money. It takes money to make money. Okay, apply that.
Yeah.
Apply that. You can build a portfolio like Gen X dividend investors, a portfolio. Money's making money.
Yep.
Like J-Mac said, it's a machine. If you could build yourself a machine. If you can build yourself a machine, you can participate the same way rich people do. So
maybe I agree with the whole make it work for you, if you want to call it a machine. One of the best takeaways from the Joe Carlson show for me was thinking about your stocks as assets that are paying themselves all the time.
mm-hmm.
We've went through a down day in the market, but that's one day closer to X dividend, right? And as those assets are paying themselves every quarter, the cost basis is lowered. So those assets are working while you're sleeping. Those assets are working for me specifically. And I know, Jerry, you work for yourself. You run your own business. Me, when I'm trading my time for money, at least I have some peace of mind to know that my money is working organically.
Right.
I'm not blowing smoke on it. I'm not pouring gasoline on it. I'm not doing any of that. It's working organically for me. And I can
got your little workers going. I mean, that's what it is. And
make it make sense for you. I think that's the key for a lot of people, And if you can't make it make sense for you, we can give you a lot of ideas if people really listen to what you said and how I make it make sense for me. Because the market, as humbling as it can be, it's kind of a mechanical thing. If you start to sit there and you're doing this crap during the day, you got the whole wrong idea about the market. Once you've made that buy, your work is done. It's done. It's done. You wanted to monitor it, fine. If you want to just ignore it, you can do that too. It's freaking working. It's like setting a boat for shore off to the horizon, and that's the key. People really don't understand. They think that because they buy that button, now it's like, oh my God, I've already got to start stressing about this thing. I've got to really concentrate to make this. It don't matter. It don't matter. What's done is done, baby.
It's nice that they have automatic transmissions on these stocks. You could just set the drip up and you just cruise control. You could do it. It doesn't have to be. It doesn't have to be difficult.
No.
It could be as easy or as hard as you want it to be. Like they say, the more you handle it, the worse off you probably are. With a lot of things, you wear stuff out. The more you handle things. So
I think that transcends. I think it goes to a lot of different aspects of life. I think it really does. Investing is just one of those small things. to where if you're spending time again after you hit the buy button, your priorities are kind of,
Yeah.
certainly, spend some time. That's why I don't apologize for putting on a 2-hour live stream every Friday, man. I think it's time well spent. Hell, I'm here. And there's a ton of people who come in here every single Friday and spend a few minutes revolving around this topic. Maybe they pick up one or two things. Maybe they pick up a few ideas for themselves. Maybe they get a little encouragement. I don't know. It's the few subscribers that come back and they're like, hey, keep it up, guys. Thank you. I'm really taking a lot from it. It really means a ton to me. But with that said, Jerry, I think I'll kick you off and thank you ahead of time. Really appreciate you coming on. It's an open door policy for you on the Independent Investors channel, Jerry. Keep growing the channel. I'm glad to hear that. I didn't know the impact of the channel. That's awesome.
Yeah, you, J-Mac, cool. And then you, the exposure there, and yeah, it's cool. As long cool. If you want to see me share my life, basically is what I'm sharing. Yep. I don't sugarcoat anything. I don't over edit anything. But I'm going to work on my January dividend income video here this weekend, and if you want to see how that turned out, come check me out.
Tune in. Catch
right
the
on.
channel.
All right. Awesome. Thank you, Ryan. Thank you, guys.
You got it. Have a great weekend, man.
You too.
Thanks, Jerry.
Got it. Bye-bye.
Later. Super cool, guys. So anytime I take the ears off, I got to tone it down because I'm yelling into the microphone. Probably one of the most successful live streams. I say that most every week. I don't mind upping the ante every week. I don't mind doing that. Just kind of goes to show how serious I take this. I don't know who's making their way into the channel, perhaps for the first time. And I always do spend a few moments anyway talking about the importance of making sure that new visitors to the community have a good chance, that they're taking a relative perspective on what they're viewing, what they're picking up via content, to read between the lines a little bit as to what's good for me, what's good for Matt Money, who I didn't shout out. He kicked in midstream. But what's good for Matt and what's good for Gen X and Jason and all these other folks that, provide, Jerry, who just kicked off, who provide their testimonials through YouTube. I think that's awesome. I think being able to understand how everybody seeks their exposure to the market may help you define what type of investor you are. We talk about the accounts. We talked about them tonight at length. You would have got the top 5 brokers, in my opinion, in the world, bar none, right? We talk about, once we get that account established, putting those products in there that are going to either put you on the passive investor road, which really any new investor can do. It really takes very little experience. It just takes some wherewithal about the market, some awareness pieces, etc. Understanding how your money is going to act under the ownership of some of those products. I think that's key. And to expect that fluctuation on a day like today, for example. Don't invest thinking that your money is going to go up every day. Okay. I will be forthcoming, and I know it's not very attractive for somebody to come onto YouTube and say, yeah, it's nice when the money goes up, but your money will also fluctuate down in value. And the idea is to have realistic expectations about the market. Okay. The market is very humbling, but it's also very, very rewarding. That's why a lot of people participate in the market. I want to take the opportunity to thank all the channel creators that came on the live stream tonight. Ryan Giffen, who came on, Jerry with GW Life. That was phenomenal. Jason with J-Mac Investing as well. I want to give a shout out specifically. All those folks, Steve as well from the DC. And finally, real treat for me, Jared Odell, absolutely, who's just a a friend of mine. He was one of the very first ambassadors in the Facebook group. And I tell you what, he's part of my core community. And I mean that. It really means a lot to me. And if we as a group can render some success on the channel, certainly, and some of the subscribers to the message can also render some success, as well as the channel creators, I think there's something there to be had about wealth building together, seeking it out individually for sure, but growing wealth together and doing so with the power of the stock market. And we don't beat around the bush on this topic. Okay, we insist on this channel that investing on your own is the absolute best way of ensuring that you eliminate the middleman. Okay, that conversation came up in a freakish manner during my conversation with Jared Odell. And I think that's further validation. There's tens of thousands of other people out there that are experiencing the exact same thing. Okay. Ask the questions. Be willing to scrutinize your own program. Be able to ask the hard questions of yourself. I do it of myself to this day. Okay. And it's really one of the many pages out of my playbook that has allowed me to render some success out of the stock market, because I'm never really looking to be content, ever. I'm always looking to evolve and increase my wealth building posture in the market. And I would just only hope that you guys can take a chip off the old block when you're employing your own program, whether or not you're a starting investor or whether or not you're a seasoned investor. And I've been doing this a long time. Great live stream tonight, guys. We'll be kicking back on next Friday as well. I look to see every one of you guys. Please understand, I do kick on a little bit before 9 o'clock, and I will be opening up the opportunity to come and talk private behind the scenes. We will not be filming any of that. We will continue to kick off at 9 o'clock. So please understand that, but it may be a good opportunity for some of you guys who may not want to kick on for the live stream. It's totally fine. I'll throw out that olive branch to those folks who may want to take advantage of that prior to the stream. But with that, guys, I will sign off. Have a great rest of the weekend. Good luck next week. And we will see you next Friday on the Independent Investor Channel. Thank you very much, guys.